Crypto trading. Basics. Crypto trading is a relatively new and rapidly developing market that offers unique opportunities for investors and traders. This is a market for digital assets such as Bitcoin, Ethereum, and other cryptocurrencies. Trading cryptocurrencies can be profitable, but it also comes with high risks, so careful study of the basics is necessary. In this article, we will cover the basics of crypto trading, including 1. What are cryptocurrencies and blockchain? 2. Basic concepts of cryptocurrency trading. 3. Popular crypto trading strategies and tools. 4. Risks and risk management in crypto trading. 5. Taxation and regulatory aspects. 6. How to start trading cryptocurrencies. To register on the BingX crypto exchange, use the referral code 911. Crypto trading. Basics. What are cryptocurrencies and blockchain? Cryptocurrencies are digital assets created and managed using blockchain technology. Blockchain is a decentralized, distributed digital ledger of transactions that securely stores information. Key features of cryptocurrencies. 1. Decentralization. Cryptocurrencies do not have a central authority. Instead, they operate within a peer-to-peer network. 2. Anonymity. Transactions with cryptocurrencies are usually anonymous or pseudonymous, which ensures privacy. 3. Security. Blockchain technology makes cryptocurrency transactions very difficult to hack or counterfeit. 4. Limited offer. Many cryptocurrencies have a limited maximum number of coins that can be issued. The most famous cryptocurrency is Bitcoin, launched in 2009. Since then, thousands of other cryptocurrencies known as altcoins have emerged. The most popular of them are Ethereum, Ripple, Litecoin, etc. Basic cryptocurrency trading concepts. Trading cryptocurrencies is basically similar to trading the traditional stock market, but with some differences. 1. Trading pairs. Cryptocurrencies are traded in pairs such as BTC, USD, ETH, BTC. One cryptocurrency acts as the underlying asset, the other as the quoted asset. 2. Volatility. Cryptocurrency markets are characterized by high volatility, which creates more opportunities for earning money, but also increases risks. 3. 24/7 trading. Cryptocurrency exchanges operate 24/7, unlike traditional stock exchanges. 4. Liquidity. Liquidity in crypto markets can be lower than in the stock market, which increases slippage and order execution issues. 5. Margin trading. Many crypto exchanges offer margin trading, which allows you to increase your potential profitability, but also increases your risks. 6. Cryptocurrency storage. Traders should store their cryptocurrencies securely in hardware or software wallets. Popular crypto trading strategies and tools. There are many trading strategies used in crypto trading. Most popular. 1. Scalping. Quick trades lasting from a few seconds to a few minutes, with the aim of making a small profit. 2. Day trading. Opening and closing positions within one trading day. 3. Swing trading. Holding positions from several days to several weeks, profiting from medium and short-term price fluctuations. 4. Investment trading. Long-term ownership of cryptocurrencies in order to profit from the growth of their value. Basic crypto trading tools. Charting and technical analysis. Study of price charts and indicators to determine trading signals. Orders. Market. Limit. Stop and other types of orders for entering and exiting positions. Risk management tools. Stop losses, take profits, portfolio diversification. Indicators and signals, or MEC. Moving averages and other technical indicators. Analytics and news. Tracking market events, fundamental factors, analytical reviews. Risks and risk management in crypto trading. Crypto trading involves significant risks that must be carefully managed. 1. Market volatility. Sharp and unpredictable price fluctuations can lead to large losses. 2. Exchange hacking and theft. Crypto exchanges and wallets can be hacked, which can lead to loss of funds. 3. Regulatory risk. Changes in legislation and regulation may adversely affect the market. 4. Liquidity risk. Low liquidity may make it difficult to open and close positions. Key risk management methods. Portfolio diversification. Distribution of capital between different cryptocurrencies. Using stop losses. Automatically closing a position when a certain loss level is reached. Position size management. Limit position size according to the size of the trading account. Using limit orders. Place limit orders instead of market orders for better price control. Hedging. Opening counter positions to reduce market risk. Market research. Thorough study and analysis of the cryptocurrency market is a key aspect of effective risk management. Traders need to constantly monitor and analyze fundamental factors affecting cryptocurrencies such as news, technological changes, regulation, institutional investment. Technical analysis is the study of charts, indicators, and patterns to determine trading signals. Macroeconomic conditions such as interest rates, inflation, exchange rates, which can influence the price dynamics of cryptocurrencies, behavior of other traders and investors, including analysis of trading volumes, sentiment, inflow, outflow of funds, industry trends and developments that may impact the future of cryptocurrencies. In addition, it is important to constantly improve your trading skills, learn new strategies and tools to stay up to date with the latest trends in the market. Taxation and regulatory aspects. Cryptocurrency transactions are subject to tax in most jurisdictions. Traders should be aware of the rules and requirements, which may vary by country. Capital gains. Gains from increases in the value of cryptocurrencies are taxed as capital gains. Trading income. Income from frequent trading of cryptocurrencies can be considered business income. Tax reporting. Traders are required to keep accurate records of all their cryptocurrency transactions and report them on their tax returns. Additionally, crypto trading faces increasing regulatory regulation. Traders must monitor changes in legislation, comply with customer identification, anti-money laundering and other regulatory requirements. To register on the BingX crypto exchange, use the referral code 911. How to start trading cryptocurrencies. To start trading cryptocurrencies, you need to follow these basic steps. 1. Learn the basics. Thoroughly study the concepts of crypto trading, various strategies and tools. 2. Opening a trading account. Register on a trusted crypto exchange such as BingX. Use referral code 911 and fund your account. 3. Choosing a trading strategy. Determine which type of trading, scalping, day trading, swing trading best suits your profile and goals. 4. Risk management. Set position size management rules. Use stop losses and other tools to minimize risks. 5. Start of trading. Start with small transactions. Hone your skills, gradually increasing volumes as your experience grows. 6. Continuous learning. Continue to study the market, analyze your trading decisions, and improve your strategies. Asterisk. Crypto trading offers many opportunities, but also comes with high risks. Therefore, it is important to approach it responsibly, gradually increasing your knowledge and experience. Successful crypto trading requires discipline, patience, and continuous improvement. To register on the BingX exchange, use the referral code 911. Important. 1. Our team has direct contact with the management of the BingX exchange, and if any controversial issues arise, those who are registered and see the referral code 911 in the account and securities section opposite my inviter can contact me. And those who have registered, but they have a different referral code in the My Inviter column, they will resolve issues themselves if they arise. The most valuable advantage of our partner is the prompt resolution of issues, while on other sites primitive problems are resolved over weeks and months. 2. If you have a VIP level on another exchange, we will issue plus to VIP levels on BingX. 3. For users trading using my affiliate code 911, do not forget about the % discount on commission on perpetual futures and the % cashback commission. TS. In any case, everything is discussed in each case separately, and for speed in Telegram, everything will be BingX. If you want to try an innovative cryptocurrency platform that is quickly gaining popularity and serving over 10 million users worldwide, then BingX is the perfect choice for you. Registration on the exchange is simple and quick, and with a wide selection of over 836 cryptocurrencies and a variety of trading tools, you can maximize your investment. Join BingX today and discover unique crypto trading opportunities.